Hello, and welcome to our Weekly Market Roundup, your one-stop source for the latest in global market trends, key economic insights, and top financial news. I'm your host, Daniel, bringing you the highlights and the happenings from around the world. Let's dive into the numbers and stories that moved the markets last week. Global markets saw gains across most regions, driven by expectations of potential rate cuts from central banks, particularly the Federal Reserve and European Central Bank. However, China lagged due to ongoing concerns about its property sector and weak consumer spending, which weighed on investor sentiment. The U.S. equity markets had a good week, with the S&P 500 rising by 1.45%. The Nasdaq Composite also gained 1.4%. Investor optimism was bolstered by expectations of potential Federal Reserve rate cuts following Fed Chair Jerome Powell's dovish remarks at the Jackson Hole Symposium. European markets saw solid gains as well, with the Stoxx Europe 600 climbing 1.3%. The Eurozone benefited from a boost in services sector activity driven by preparations for the Paris Olympics. In the UK, the FTSE 100 rose by 1.8%, supported by strong business activity data. In Japan, the Nikkei 225 advanced by 0.8%. The Bank of Japan's cautious approach to normalizing monetary policy helped stabilize the market. The Shanghai Composite Index faced a tough week in China, falling by 1.5%. The People's Bank of China's decision to keep key lending rates unchanged did little to boost investor sentiment, as concerns about the property market and weak consumer spending continued to drag down the market. The yen strengthened against the dollar, with the 10-year Japanese government bond yield increasing slightly. The GBP-USD pair saw an upward movement from 1.29 to 1.31, largely driven by a combination of factors. The weakening of the US dollar, especially in the lead-up to the Jackson Hole Symposium, provided support for the British pound. Investors were also optimistic about the UK's economic prospects, particularly as inflation expectations in the UK appeared to stabilize. The euro rallied 1.3%. Oil fell overall for the week, trading below $75 on Friday afternoon versus around $77 a week earlier. The gold market went back and forth last week to close the week 0.3% up. Fed Chair Jerome Powell's speech at the Jackson Hole Symposium hinted at a more dovish approach, suggesting that rate cuts might be on the horizon. This shift was driven by mixed economic data, including signs of moderating inflation and weaker job growth. The labor market, while still tight, showed signs of cooling, which supported the view that the Fed might ease monetary policy to sustain economic growth. Meanwhile, core inflation is showing signs of moderation. In Europe, business activity picked up in August, driven by the Paris Olympics, with the Eurozone's PMI rising to 51.2. However, manufacturing continued to shrink for the 17th consecutive month. The ECB noted a slowdown in wage growth, which, along with weak economic data from Germany, led to increased support among ECB officials for potential rate cuts in September. In the UK, business activity accelerated, with the PMI reaching 53.4, signaling strong private sector performance. BOJ Governor Kazuo Ueda reaffirmed the central bank's stance to continue adjusting policy as long as the economy progresses towards stable 2% inflation. Core consumer price inflation rose for the third consecutive month in July, supporting the BOJ's hawkish shift. The People's Bank of China, PBOC, kept its benchmark lending rates unchanged. Here is what to keep an eye on this week. That's a wrap for this week's Market Roundup. Thanks for tuning in. Be sure to subscribe and hit the bell icon to stay updated with the latest market news and analysis. Until next time, stay informed and stay ahead. I'm Daniel, and I'll see you next week.